What is term insurance? When the insurance world meets someone new to insurance, it can be a very big deal. Welcome to Insurance Reassurance, and today we are going to answer the question of, you guessed it, what is term insurance? For this topic, the information will be centered around insurance policies with a term, which will allow you to understand term insurance, the different kinds of term insurance policies, and the prices and different lengths of the term insurance policies. This video will also touch on some key takeaways of term insurance. We know this is information we all may need to know at one point of our life, so with that being said, let's get started. Term insurance is a kind of life insurance policy that gives coverage to a specific period of time or a predetermined term of years. On the off chance that the insured passes away during the time period indicated in the policy and the policy is active or in power, a death benefit will be paid. Term insurance is at first substantially less costly when compared with permanent life insurance. In comparison to most kinds of permanent insurance, term insurance has no cash value. All in all, the only value is the guaranteed death benefit by the policy. Understanding term insurance. Let's try to understand term insurance just a little better here. There are different kinds of term insurance policies accessible. Numerous policies offer level premiums for the span of the policy, for example, 10, 20, or 30 years. These are frequently referred to as level term policies. A premium is a particular cost, which is usually month to month, that insurance companies charge policyholders to provide the advantages that accompany the insurance policy. The insurance company computes the premiums dependent on the person's health, age, and life expectancy. A medical exam that surveys the individual's health and family medical history may be required depending upon the policy chosen. The premiums are fixed and paid for the length of the term. On the off chance that the policyholder passes away before the expiration of the policy, the insurance company will pay out the assumed worth of the policy. On the off chance that the term expires and the individual passes away shortly afterwards, there would be no coverage or payout. However, policyholders can extend or renew the insurance, but the new monthly premium will be based on the individual's age and health at the time of the renewal. Accordingly, the premiums could be higher for the renewed policy compared to the first term policy that began when the individual was younger. Premiums can range based upon the age and the measure of payout. For instance, a 30-year policy with a $250,000 payout can go from $15 every month for an individual in their 20s to under $60 every month for somebody in their 50s. Obviously, every insurance company may have various rates depending upon the policyholder's health, history of smoking, and different variables. Key takeaways. Term insurance is a kind of life insurance policy that gives coverage to a specific period of time or a predetermined term of years. In the event that the insured passes away during the time period determined in a term policy and the policy is active, a death benefit will be paid. Many term policies offer level premiums for the length of the policy. Other term policies offer decreasing or increasing benefits over the long run, including the choice to change over from term insurance to permanent insurance. Types of term insurance. There are different sorts of term insurance other than the level term policies we've laid out up until this point. Every policy has its advantages and disadvantages based upon the policyholder's needs. Convertible term. Now we can introduce to you convertible insurance. Convertible term life insurance permits a term insurance policy which has a predetermined number of years prior to expiring to change over into whole life or permanent insurance. The significant advantage of convertible insurance is that the policyholder doesn't need to submit to a medical exam, nor are any health conditions considered when the term policy converts to permanent insurance. Increasing term. Now you may want to increase the death benefit of your policy. A few policies permit you to increase the death benefit as time goes on. The premium increases too, yet it permits policyholders to pay lower premiums almost immediately in life when they have a great deal of bills and expenses. The increasing term prevents qualifying for another policy at an older age to get the additional benefit, as would be the situation with traditional term insurance. Mortgage term or decreasing term. Another type of policy is a mortgage term or decreasing term policy. A mortgage term or decreasing term policy is something opposite to the increasing term because the death benefit amount decreases rather than increases over the long run. The objective is to coordinate the decrease of the term benefit to the decrease of the policyholder's outstanding mortgage. The thought behind this system is that you don't require as much life insurance in the event that you have less mortgage debt. However, although the premiums are less than term insurance, the premium payments stay consistent even as the benefit declines. Annual renewable. Finally, for our last type of policy, we have annual renewable policies, and this allows you to automatically renew your term insurance on a year-to-year basis. The catch, however, is that the premium increases from year to year due to the fact that the policyholder is increasing in age, but you are also guaranteed to be approved for a renewal every year. As every year passes, the term insurance is renewed, however for a higher premium since the policyholder is a year older. The advantage to annual renewable term insurance is that the coverage is guaranteed to be approved every year. In any case, it may not be the most cost-effective for everybody because of the increased costs after some time. And that brings us to the end of this video. Thanks for joining us today. If you enjoyed our video, hit that like button. It really helps us out here and it allows us to continue to make the content that you crave. And if you haven't already, hit the subscribe button so you can be alerted to when our next video goes up. We will see you next time, right here on Insurance Reassurance.